Not poker lessons at the moment. Just got chopped in. I got split, but not my style. This is Omaha High-Low. A little underfunded. I don't really got many chips in here. I haven't got much money in the account. Put a little bit on. Play a little bit, then I get into the game. Not poker lessons at the moment. Just got chopped in. So Omaha High-Low is it's a game where you got to take the highs and the lows. So here I've got second best low draw and a pair of sevens. Now I've got two pair and low draw. So this is bad. Oh, he had nothing. Fuck me. I was bluffing. I'll play a couple more hands, boys, and we'll get into the game. Into the Forex game. Just relaxing a little. I don't have a signal, you fools. Oh, I'm sorry, Apex. You can learn Forex from me in a sec, mate. Look at this kid. I trade every night, Apex. We're about to start, mate. Just relax. Good hand. So this game here, I just won half the pot. All right, last hand. So the way that happened is we had the same low hand, but I had a better high hand. Now I've got 2 pair and also it's 2-6 low. Enough of that, boys. Enough of that. I haven't played poker for a long time. I used to play it semi-seriously back in college. But these days, I just don't have time. It's fun, but it's not worth it anymore in terms of making money from it. It's a lot tighter, so it's a lot harder to make a living. It requires you to sort of make money a lot from, you end up paying more in rake, and if you're on a tight table, that table was really loose, so that was fun. But you don't usually get that. You don't usually get that in the market. In the Forex, PokerStars is the only place left to play. There was a day though when poker was huge. You could like play on 30 sites, but its heyday is over. So like, I don't know. I mean, it's not like Forex has ever had huge following, but at some point there's not going to be 1,000 brokers like there is now, right? So there'll be consolidation in the industry at some point. Alright then, fine. My microphone's being ridiculous. So, last night we were talking about US dollar strength. We got a little bit more. But we've seemed to have found a bit of resistance across most pairs. Support. And namely, the dollar-yen rally has subsided a little. So with that, you've got the opportunity for a lot of the other pairs to bounce. What we got was the Aussie bouncing off 85 and the pound bouncing so far at the start. The main ones that are moving. Kiwi as well, but just assume that Kiwi and Aussie are moving pretty much the same sort of pattern. So dollar yen is the main reason we got the extra US dollar strength last night. We got another story out from Japan. This one actually got the market's attention that they're going to start buying European bonds, foreign bonds, and this allowed, because they're not allowed to intervene, they literally said, because we're not allowed to intervene by the rules, we'll buy foreign bonds as a way to lower our currency. Okay, now the market's reaction to it was great, and then you got more people talking about it today in Asia, so it looks like that's the new game that we're going to be looking at here. I'm just looking at Sean S left. I got nothing to learn from this guy. Yeah, alright, mate. Yeah, no, it's I mean, poker's funny, mate. It's a good way to relax for me. Oh, look at some kids are freaking out. Look at them. All right. I'll play less poker on this stream. Jesus, first time I play poker. Guys get upset. Ridiculous. But in terms of, has anything changed from yesterday? Look, I think we're a little high now in terms of US dollar strength into this NFP. So the risk reward of getting long the US dollar is a lot less than it was on some of those trades that we're looking at in the last couple of days. So selling the Aussie on the rally is the trade you want to do. Buying dollar yen on the dip is the trade you want to do. But what sort of level are we now happy to get involved in? I mean, you happy to buy dollar yen above 103 into the NFP? Not my sort of trade. You're happy to be selling Aussie in the low 85s rather than the high 85s? Not really my sort of trade either. So some of the other pairs that we moved to yesterday, the final trade that we did was selling euro pound. That's working out. A lot of it's to do with month-end flows being less than expected. We didn't get the limit order filled, but we went in on spot as well. So this trade's working out well, back below 85. And the only other trade we got going is the euro yen, and the euro yen popped with the dollar yen, so euro yen is going quite nicely. So this is turning out to be a decent way to be into the NFP. Actually, if you can be in profit, let the market run. Pound yen obviously did a lot more than some of the others too, but pound yen is notoriously hard to trade unless you're really at the computer all the time and don't really want to be involved in that at the moment. But it's got more room to the top side. So the dollar yen, we're talking about 105, right, on a strong NFP number in the coming week after, if not on the day, if it's super strong. That would lift every other major, so every other yen cross up to those high levels. So we'll be looking at that. There's been a little bit of data out in the last hour. Nothing that really moves the market that well. The main thing today is going to be the, I mean, CPI was a little under, but that's missed by a little bit. The main thing today, we're going to be looking at the ADP report to see if there's some indication of how the NFP is going to be playing. Now, because we're so high, it's not likely that you're going to see the NFP be front run from this level. Okay, but if it's weak and you get a pullback for the dollar yen to some pretty decent levels, I'd still be interested in getting long. Level I've been looking at is 102.60. Preferably I want to get in at 102.30, but that would be asking for the market to pull back significantly. Aussie dollar, if I have to trade today, it would be near a 75.40 to 50, but let's just say 75.50. And it's a sort of trade I'm not going to be happy with, because you know how these like to overcompensate sometimes on these rallies, and the market, I don't think the market is ultra ready to sell the Aussie at the moment. So it hasn't got that final little death nail that it's short going lower, so the profit taking range trading is likely. But still, if I wanted to be into the market, into the NFP, I want to be short Aussie rather than long Aussie in the current market mood. So if it's going to be range trading for the next 48 hours before the NFP, I want to be selling rallies rather than buying dips. But there's no reason to force a trade. Yeah, and that's what it's going to be if you're trading at the moment. Aussie Kiwi, yeah, we've been trying to buy this. It hasn't stopped falling yet. I mean, look, if I wasn't in the market, I'd be buying. I've got enough exposure as it is. It can go down to 102 though, it looks like, and maybe even test the all-time lows 101. We'll see how it develops, but it's getting very interesting. And this is more of a buy and hold for 6 months sort of trade that I'm looking at here. So expect me to hold these trades that I have long here, you know, still be long at December. If I'm not, then I've cut out way too early, probably to make significant return on the you know, if I let the trade run 200 points, 300 points, I've got to let the trade run 400, 500 points to the top side, which is, it's easy enough to see the market getting to 112 if the divergence trade begins. For those who haven't watched any of my other streams, the divergence trade is the RBNZ cutting while the RBA stands pat. At the moment though, the market hasn't fully priced that in, hasn't even started to trade that trade. It's more about the yield differential at the moment. The yield differential is in the favor of Kiwi still. So you're seeing outperformance still from the Kiwi, and the Kiwi you've seen lately has been bouncing fairly sharply on these sell-offs. All right, but the same thing holds still that we were talking about last night. If there is a big shift to the US dollar, then this pair has the biggest move down to below 70 cents to get to that 200-day moving average. So this is why really, in the event of a US dollar turn, the play in catch-up, where the market turns from neutral or slightly long on the Kiwi to short, is going to lead to the resumption of the Aussie Kiwi rally. And we talked literally the same talk back here. Okay, but we were too early. This rally failed. So we're a little bit early, but the same reason was given by the market when they were rallying, and it's a real reason, and it's going to begin at some point. We just have to pick the timing right. So I'm not afraid of that trade. I'll add money to protect that trade. I won't add to the position until we see some bullish signs, something bullish out there. You don't need to keep buying just because the level is low. You want to buy when the market's showing you that there is some bullish price action. There's no other reason other than that. See, the stream's a bit jumpy again. I'm really going to have a little look at my computer, see what's happening. Hey Will, how you going, mate? There's another way to be trading though, guys. There's another way to be trading a long-term view. Something I haven't really talked to you about at all, but I may want to touch on it just now. Let me see if I can log into an options trading account. Show you the pricing on an Aussie Kiwi at the moment for 6 months. Let me get rid of this video. It's just chopping it up, making me upset. I think at the end of the day I'm going to have to upgrade this computer. The NBN's fine. It's just... it now is only booting 1 out of 10 boots. It's failing. I mean, that can't be a good sign. And rather than just upgrade a little bit of the computer, right, I want to upgrade the whole thing. This is just... it's just unnecessary to try and keep something alive. That's unnatural, right? Let it die. Just bear with me 1 sec, guys. We're going to get across, look at an option pricing And I'll explain a little bit about options as well. Options are a big part of FX, very underestimated. And sometimes when you don't know where the market's going right now, but you do know where it can go in the future, you can look at the options pricing and see if this is a relatively cheap way of getting exposure to a market. And then once you're in the market, if the market starts to go your way, there's something called delta hedging. Now, delta hedging is a very lucrative money-making tool for traders in a volatile market. Yeah, so sometimes the market just doesn't go straight up. Doesn't mean that you can't do something with your option. Alright, so the pair that I'm looking at here is going to be Aussie Kiwi. Alright, so here we're thinking that the Aussie is going to base out in the next couple hundred pips. It's never been below parity, and it's going to rally as the RBNZ cut rates later this year. So we're not sure where it's going to get down there. We're not sure when it's going to turn, but we're pretty sure in the next 6 months it's going to turn. So if you're thinking about buying, then it's a call option. A call option is the right to buy, literally. That's what the call option is. I'm going to extend it all the way to February 24th of February 2017, and the strike price is just at market 103.72. That's my wife talking to friends, cooking in Thai. Yeah. You can hear that, can you? That's a pretty good microphone. And they're not the quietest people in the world. So, currently, that costs 255 New Zealand dollars for a 10k deal. So you can think of it as equivalently around about 255 pips. Right now, that sounds relatively expensive to a day trader. Well, that's a lot of pips. But we're talking about the market going to 110. In terms of scenarios, I want the pair to go back towards 110, and once it goes rallying past 105 this time, it may not stop. I'm just going to get a little bit of... Alright, so in this scenario here, the break-even point is going to be 106.26. Alright, and we start to make money above 106.26 in the next 6 months. That's if you hold it to expiry. If the market starts rallying straight away, what this 255 pips is actually the price to have a 6-month option. If it rallies in the first month, then you're still going to have 5 months worth of value in that option. So it may not be 255 Kiwi worth, but it may be worth, say, 200 Kiwi after 1 month. So it doesn't lose all its value at once. So it's a mistake to think that this pair, that the option is you have to go to 255 to actually make your money back. It has to go 255 in the first, over 6 months, which is nothing. All right, but it is hard to see that as a day trader until you've been in the market long enough to know how far it can move and what sort of target you're looking at. All right, so the main benefit is that you can't be stopped out. If by some chance here you're completely wrong in your view, you cannot lose more than your premium on this trade. All right, that is the risk that you're looking to take. All right, so your premium is what sets the total amount of exposure that you have. You can't lose anything more than that. The market can go down below parity for the first time, break parity, make into some new range, keep falling, break stops, go to 97, when everyone else is in the day trading market and getting crushed, right? You have this limited risk. The other side is that if you're saying, well, this is really, really expensive, you can't make money with buying 255 Kiwi option. All right, well, I mean, there's the other thing you can do with an option, which is sell it to the market, right? So you can sell the option to the market. And options are priced a lot by computers. They don't care that the Aussie Kiwi is at all-time lows nearly. It will still give you a relatively similar price for a call to a put. Now the call and the put will be different, the right to sell will be different here. It's hard to expect the sell option to be worth as much as a call option given where we are in the market. Okay, you can see that it's cheaper to be buying a put option than a call market. Now why is that? Because it's unlikely to go lower than higher. The option market therefore is telling you where it thinks it's going to be in 6 months. Now this is not a small thing. Right? This is called the skew in the option. Now if you're new to trading and you want to learn something tonight, listen to this. The skew in the option is big money making plays on where the market is likely to go later. Right? That is the skew. Right? The demand on it it's 100% in a non-hedging type currency like this particular pair. It's 100% going to show you the direction that the market thinks is going later. So if you're looking at something like, I don't know, Aussie dollar, okay, it's good to see where the skew is on say a 3 month, because you can then infer how the market's positioned. The market's more positioned to the downside than the top side right now. Alright, now that might have changed in the last couple of hours or in the last couple of weeks or after the Yellen. Alright, now to know how the market's moving gets a little bit complicated, because how do you chart changes in the market, in the options market? Well, they actually literally chart it. Right? That's the way they do it. Let's have a look if I can find this for you. Got a lot of rubbish. Trading floor. It is a little bit like bookies odds, but people are trading without even looking at the bookies odds. Broke Mike. Do you know what I mean? You should really be just at least happening. It's not binary options. What the fuck, man? Oh god, binary options have made the whole options world look like they're dodgy, when it's like binary options is some like creation of the of the gambling industry. Alright, so you don't need to learn about volatilities. That's very advanced for the first time I'm talking about it with you guys. The risk reversal is the difference I was talking about there. Now the risk reversal is, it shows the skew in the market. Okay, well, it's a skew in a specific market. Alright, at the 25 delta of the call and the put, it's showing the difference in the buying and the asking. Alright, now the reason why they use these, it's because literally, as I say below, in the most liquid part of the options market, and what they want to be doing is showing, if you're looking at this, how do you get away, how do you see what is important? Alright, there's a big negative skew on the downside with the euro yen. Alright, that's been changing quite rapidly to a positive. So the euro yen's flipping lately. The euro yen's flipping from being skewed to the downside to skewed to the top side. Now, what can you take away from that? That happens when there's big movement in the market, and also it happens when market's starting position for a new direction. But it's still skewed negatively, right, to the puts, not the calls. So if we're looking to the top side now, how does that play out in the euro yen? It's good for our buy position, but I didn't use this when I was entering the market. I thought that it was looking pretty bottoming, but now the market's starting to respond to that, the options market. And you can see, if we come back in, say, a couple of weeks and have a look at the options, right? Maybe I'd look at it once a month with you guys, slowly teach you over time. The skew would be completely changed if we're back above, 118, 119. The skew would be probably changed to positive, all right, from negative, meaning that calls are more expensive than puts. All right, so I mean, this it's good to see. It's just a topic that I'm introducing, but it is it should be a tool in your arsenal as a trader on how to get into the market. And these are the charts here I was talking about before. The change in the risk reversals, showing you, and a lot of to do is when big announcements happen, like the pound, volatility went nuts, but back down to normal now. It's good to see that sort of change over time, to know how the options market's moving, and when you want to use them, it does take a little bit more experience, but over time I'll try and show you one. But what I'm going to do today is just buy a long-term Aussie Kiwi call, and we're just going to see how this one goes. If I get the chance, at some point I'm going to show you how to delta hedge your option, your pair. And hedging works both ways. You may at some point want to be hedging your spot trade. All right, now when you can do that, that opens another door on how to make money in this market. A lot of people don't use options because they don't know about options. Some people come from an equity background and they know how to sell covered calls. You can make money in the same way in the currency market by selling covered calls. Even if your original position is a leveraged spot position, and it's a significant way to make money sometimes. The best traders in the world use options. Think about that, right? The best bank traders, hedge fund traders. So why are you not? And if it's because you don't know enough about options, then you need to get some education. All right, that's my 2 cents on that subject. All right, so I'm not going to go on too much about it. It is hard without giving significant attention to learn, to even talk about. But I will over time try, and maybe that's going to be of help to a few budding young traders. I'm going to look at a few reports now. Over the weekend, I'm going to upgrade my computer, probably trying to sort out what's changed in the last couple of weeks. Well, actually, it was about 2 days ago when when it started to not stream clean. All right, so the best macro early morning read in the market, read by the most traders, is this early morning read from Jim Reed, which is Deutsche Bank analyst, and it is an important one to read every now and again. I will have a look at that with you in a second. Just checking if Westpac's pretty good at Aussie dollar. I'm going to have a read of their Aussie yen update as well. No. Most bank traders do not make good retail traders. Most retail traders are not good traders. When you're out of the game, right, you don't have access to the full suite of extra information you get from flow and from having contacts with other good traders. I mean, think about it. Like, you're in a melting pot when you're in the banking game. You're in a structured environment that's built around the the thing that you're wanting to do as a living, when you step back and you try and trade for yourself, when I was trading for myself and I was not actually having to get to work every day as a dealer, it was 10 times harder to keep track of the market, because when you're stuck at work, you're forced to keep track of the market, you miss nothing. And if you've got a few hours downtime, you might as well read that report on, you know, long-term forecasts of Japan or some shit, right? That you don't get to read as a, you don't want to read. You literally don't want to read it. But you're like, oh, okay, I might read this now. Whereas the retail trader is much more casual. It's 10 times more casual. They've got no idea how casual they are, because they don't even know what they don't know, right? So it's like, you know, they're sitting there with a few technical systems, and they've read a couple of books by Mark Douglas and read Trading Wizards, and they're ready to take over the world. You know? But if you're sitting in a room and over the other side of the, you know, other side of the room is all this commotion going on in the bond market, right? And the bond traders are yelling, right? How much of an advantage is that? As opposed to you not even looking at the bond market as a retail trader back at home, listening to, you know, rant squawk. It's just, you can't compare the two. All right? I mean, a lot of the trade ideas that good traders and banks will have and do will not even be their own. That's the difference. So this project that Nick has made is an excellent project. You know, Community FX for retail traders is going to be the leveling factor. The leveling factor in what brings retail FX back to the point where they have a real chance of making money. I honestly believe that. But trading by yourself is extremely hard. You would have to be like a monk. You'd have to be so disciplined and so patient. Okay, Nick was asking why the best traders in the world use options. Alright, because a lot of the time, right, let's talk an example. Let's say I was trading the Aussie dollar a couple of weeks ago and I was ultra bullish, and I could see at this point that there was a little bit of topping. But I have a long-term view here that Aussie's going to do well. This is pre-Yellen, okay? Now, if at some point here I'm like, well, how do I make money from my long position? I don't want to close out. I'm just worried it's going to go sideways now. How do I make money from that view? Right, well, there's one way is to try and start hedging in and out and trading daily, you know, trading the intraday, like 15-minute. But if I bought here, what I can do up here is I can sell a call option. All right, now selling a call option means that I make money if the market stays the same from the time decay of the option, or I make money if the market falls. All right, and if it goes higher, the amount of money I lose for majority, say it's a 1 month option, is not as much as if the market, for my day trade going higher, if I haven't dealt a hedge, if it's just the same trade, one lot. And at some point, with this particular, I've covered this option, right? I'm covered because I'm long here. This is a option to buy up here. If it's going higher, I'm making money here, I'm losing money here, right? But if the market goes down, sideways, right, I can start making money just from the market moving sideways, and I can make money if it expires just 1 point underneath. You know, its expiration date. I won't make a lot of money, but I'm sort of feeding off that market lack of volatility, or just that top side lack of direction, and I don't have to worry too much about the market pulling back, because I'll be making money on the downside too. Now, at some point, you know, after Yellen, I might be like, I'll close, now that she's really talking up rate hikes, I'll close my long, and I've got this call that I'm just going to let go to expiry, you know, for 1 month, probably not getting back above 77.50 very easily at all, and I'm, you know, made the 150 points extra from that pair. Okay, now this is a really simple example and not a very good example, because that's not really what you want to be doing a lot of the time when you're trading. You're selling covered calls, right? That's not really what you do with options, but it's just an example. Now, you can't replicate that with day trades. Yeah, because if you start selling up here, you might get caught short, and you're like, oh, I don't want to be in this trade. You know what I mean? Like, it's a much more, it's a slower approach to the market, but it's a way of maintaining your trading idea. I will go into example more about delta hedging, but delta hedging is probably one of the better ways of showing how to make money. But literally selling options is a really good way of making money from a view that you can't replicate. It's very hard to make money in a sideways view. I think the market's going to go sideways or down. You know what I mean? Like, it's not important. Like, the same with the Aussie Kiwi. I've just bought that. I won't get into too much trouble in the option market, but I've already got into a lot of trouble in the spot market. Right? It's a different game. But yeah, generally options traders are much more profitable than the best option traders. Are just killers. You can't say that about the Forex traders, right? Majority of Forex traders lose. But we'll see, Nick. There is no retail option market, so hopefully, like Easy Markets, that's the broker I work for, and a few others are starting to push options to the retail market. Maybe they can get more sophisticated. It's a very big game, the equity options game. So if you go into the equity options game over in America, it's extremely mature and a lot of people know what they're doing. In the FX game, there's not many people in the options, and people literally think it's binary options, when binary options are something made 2 years ago, 3 years ago, and FX options have been around since, you know, the 80s. Jeez, that was a side rant. Why'd you get me taking all that? So, you know, every now and again, you're probably seeing the same thing come up and up in these bank reports: interest rate differentials. That's the difference in the yield between the Australian interest rates, which is our, you know, set now at the RBA by 1.5%, and the Bank of Japan, which is minus 0.1%. Meaning that the 2 years a little bit more than that currently. So the differential there has been falling gradually as the RBA has been cutting and signaling they're going to cut more, and the Bank of Japan has not been cutting. All right, now this is a long-term effect on the currency. If this changes direction, you get a long-term effect the other way. So it's something to keep in the back of your mind. Why, you know, how does it work? It works slowly. You know, it works very slowly, but it does form the basis of big trends. If it gets bigger again, you'll get the carry trade coming back. And the carry trade is something we don't have at the moment, but it's real. Once it gets to that 3 or 4%, 5% interest rate differential, In fact, you've probably got an emerging market carry trade at the moment. A lot of their interest rates are really high, and they've been outperforming. There's a reason for it. Alright, so Westpac expects the RBA to keep at 1.5 in 2017, so do I. And they don't understand why interest rate futures imply a 50 to 60% chance of a rate cut at the end of 2016. Yeah, I think this is helping that Aussie Kiwi trade as well at some point. So yeah, Bank of Japan's going ballistic. So they don't know what else to do. They're just buying more and more and more bonds. They own a third of the Japanese stock market. They're they're out of control, but they've doubled down and tripled down on this. So it's likely they're going to announce something new, and what it is likely to be is they're going to be buying now foreign bonds. To buy foreign bonds, they've got to go sell their currency, buy another currency. That creates artificial demand from the central bank for the yen crosses. But probably what they're going to be buying most of is dollar yen. I hope that you understand what I mean by that. Yeah, but the carry trade is only 60 minute men. 60 minute man, what the fuck type of name is that? What? Let's see what they're talking about, because they're probably talking... Yeah, they're talking about the emerging markets, like I said. I was talking about the carry trade back in 2008. Right, the carry trade back in 2008 was all about the Aussie yen. And then you had the unwind in the Lehman Brothers, and it fell 3,000 points in 2 weeks. It was ridiculous. Every now and again you see people talk about the Commitment Australia's report. What's going on in the COT report. Now, that's something we don't talk about too much here in this chat, but it's good to keep a track of. It generally lets you know when the market's flipping, and the market has been pretty long on the Aussie, and probably is flipping late in the next few days, or next few weeks, sorry, to be short, as the market prices in the optionality of a September rate hike. I'm in the camp they're not going to raise in September, but I can be swayed by a strong NFP, right? I'm not dogmatic about the Fed being useless. I've just been watching them for 5 years. You know what I mean? Like they just don't seem to be in any hurry. So if there's any sort of excuse, they'll find it not to raise rates. Alright, they bought Aussie Kiwi as well. They're probably in trouble as well on that trade. Alright, we're going to finish up with just a little look here through. I just want to see his reaction to the BOJ report. Oh, he didn't talk about it much. There was another little comment by Fisher yesterday you may have seen if you keep track with the news in the FX market. I mean, that's not dovish talk, right? Labour market's very close to full employment. Alright guys, I'll be up later watching the ADP report. I'm going to be not so much trading off it. I just want to see the market's reaction to whether it's strong or weak. I'm in no hurry to get exposure here. you want me to look at a particular currency, please PM me and I'll look at it the next day. If you're watching this at YouTube, come across the Forex Signals. There's a chat room there and a viewing screen for the YouTube. You'll get access to the chat where I can read any questions you have as well. I don't answer questions on the YouTube chat. You trolls over there. Other than that, guys, good luck. Trade safe. Labour market's very close to full employment.